Well, hello and welcome to this midday market mood check with me, Nandita Khemka. If you look at the markets, a good day of trade coming in because the Nifty is trading above that 17,500 mark. It's a triple digit up move on the index. But if you look at the broader end of the markets, the mid cap index is underperforming the benchmarks. Among the sectoral movers, you have the realty pack as well as the FMCG basket that are among the top sectoral gainers. But autos and PSU banks are among the laggards. Remember, we have the RBI MPC outcome tomorrow as well, and ahead of that, some of the rate sensitives are turning cautious. When you talk about the Nifty individual movers on the Nifty, you have the likes of L&T, HDFC Twins, ITC, Titan, Bajaj Finance. These are some of the counters emerging as the top gainers. But if you look at the other losers, on the flip side, you have Eicher Motors, you have IndusInd Bank, Apollo Hospitals. That one has been losing on a consistent basis. NTPC, SBI, some of these counters are not doing all that well in today's session. But let's touch base with Ajit Mishra of Relia Securities then to talk about how to navigate the markets in the current situation. Ajit, good to have you here on a midday market check. Nifty is above that 17,500 mark. What is the next resistance level that you'll be watching out for on the index? And how is Bank Nifty looking to you ahead of RBI policy?
Thanks, Nandita, and good afternoon to you. And so basically, yes, there's a bit of a respite that we are seeing in the market, and it's a continuation to the last week's rebound that we had, in the March. But if you see broadly, Nandita, that we had like almost three successive months of decline. The last month was almost in the flat tone, and now we are seeing a bit of a recovery. So we feel that this recovery is not going to fade away anytime soon. After this long corrective tone that we are seeing in the markets. Yes, due to intermediate hurdles, because if you talk about Nifty index first, so we are trading closer to the long-term averages, 200 days of exponential moving average, which is around 17,500. So we might take a breather. Plus, we have an important event of MPC meet. So we might see that Nifty take a breather and we see some consolidation around the current level. So in case if you have an existing position, one should keep on trailing stop losses on every rise. So at current level, 17,400 should be your stop in case if you are holding existing long in the Nifty. Fresh buying, I would recommend to wait for any dip around 17,400 to look for any fresh buying opportunity. Banking looks comparatively stronger. So yes, but since we have an important event, we would recommend that one should remain selective, and especially in the rate sensitive private banking majors and select auto counters are looking comparatively stronger to us.
Right. Let's also talk about some of these metal names. And Hindalco is one stock that is among the losers. It has given a muted outlook for its arm Novelis for the next quarter, right? But we also have a query coming in from Smith, and he wants to know your thoughts on Hindalco, and wants to know also your target price on this stock. So, what would you advise investors to do on this one?
So Nanta, if you notice that in this rebound, almost all the sectors are participating on rotational basis. But barring a couple of names like metal, we have hardly seen any respite. So it's still hovering around the previous swing lows. So I feel that for a time being, it's prudent that one should avoid the metal basket. And within the metal basket, Jindal Steel, JSW Steel, they are the top consistent performers. So in case if you want to accumulate, only in the metal stocks, then one should prefer the stocks which are relatively higher strength. So JSW Steel, Jindal Steel, something that one should look at. And in case if you have an existing position in Hindalco, I would recommend you to maintain a stop at 398 for the existing position, and any bounce around 410, 412 area, you should try and exit.
Right, so exit on bounce is a call on Hindalco. Let's also talk about some of these construction companies. L&T has bagged an order. It's the top Nifty gainer today. You also have NBCC, which has bagged a 450 crore rupee order from the defense, in fact, Home Ministry rather. So these two counters doing extremely well. How would you play this one? These two counters. Would you advise booking
So
profits or
L&T,
trying to?
yeah, yeah,
Would
please
you advise
complete your
booking
question.
profits now?
Yeah, so L&T as if you talk about very few stocks from the index baskets, during this corrective phase, which managed to hold around the record highs, and L&T was among the those few names. So there was hardly any retracement when the markets were under pressure. So that clearly shows the kind of strength that we have in this counter. And today we have a fresh breakout also. So you should definitely hold in case if you are holding, long position in LNT. And now I believe this zone close to around 1170, 1175 should act as a very strong support area. Positionally, there should be a new high, maybe closer to around 2450, 2500 is something that one can wait for. So this stock is definitely should be on your radar. And NBCC, I feel it's offering you opportunity to exit, because if you see that in almost 1 year there was hardly any participation when it comes to the price action. And this rebound which you are seeing right now is offering an opportunity to exit. So close to around 3840 zone, one should utilize this bounce to exit for the existing position and avoid fresh longs.
Well, avoid fresh longs, but hold on to existing positions. That's the call on LNT. I also want to get your thoughts on Bajaj Finance. It has seen strong new loan bookings in the last quarter, 20% growth, and the shares have been underperforming off late. Do you think it has seen the worst now, and it has bottomed out, and it's time to actually nibble into this counter now?
So yes, what we have been observing is that close to around 57, 57.50 is the area basically where it is finding support, on the monthly chart. So today also it was up nearly 2.5%, but now we are seeing a bit of a profit taking at the higher levels. So in case if your view of accumulating the stock, let's say for a medium to long term perspective, definitely it's an area where one can start accumulating. So 50% around the current levels, and in case if it retraces further towards 55, 5400 area, then one can add more. And then they should wait for the stock to cross 6200 mark for any reversal. As of now, it's an accumulation, something that one can look at in Bajaj Finance instead of very short term trading perspective.
Right. Since we are talking about finance companies, let's also talk about PNB Housing Finance. It's the top loser on the Nifty 500 index today. The rights issue price has been set at 275. That's at a deep discount. And because of that, the shares are down somewhere around 14 to 15% in today's session. Uh, Avoid this one or time to buy into it?
In fact, interestingly, it was outperforming the other housing finance stock in the recent decline, because if you have noticed that in the last 3, 4 months, it has moved up from 300 to 600 plus zone. But in the last, 1 month's time, we are seeing this bit of a profit taking at the higher levels. So, but again, since we see very erratic swings in the stock, and the volume also fluctuates a lot, so it's prudent to avoid this stock. In fact, LIC Housing Finance, after this recent sharp decline, is available around the monthly support area, close to around 320, 330 is the zone where we have multiple supports in LIC Housing Finance. So within this basket, I feel that LIC is a better candidate in case if the view is short term.
Right. LIC housing is a better candidate compared to PNB housing for the short term. Let's talk about some of these oil and gas companies. Government has slashed the windfall tax on crude output to nil from 3,500 rupees per ton, and that comes as a boost for companies like ONGC and Oil India. In fact, I think CLSA has also come up with positive view on both these counters. Uh, Comes as a boost. So, would you suggest one looks at some of these oil and gas counters now?
So yes, in fact, these stocks are anyways doing well. There were hardly any decline during this recent corrective phase, and it's a kind of a consolidation tone that we are seeing in both these stocks, so Oil India and ONGC. So Oil India is comparatively stronger if we talk about from the very short term trading perspective, and in case if the view is very short term, then the preference should be given to the oil. With stop around 255, and there's a possibility that we might see a new record high also. So 280 plus should be your target area. ONGC, the move is going to be gradual. There's more of consolidation likely to continue.
Right. Some of these auto ancillary companies are in focus. Bharat Forge, that stock is down as North America Class 8 orders have declined on both on a YY basis and a month-on-month basis. Do you expect some more weakness on charts with some of these companies like Bharat Forge and RK Forgings going forward?
So Bharat Forge, it was among the top performing name, but in last 1.5 month, we are seeing gradual profit taking, and the stock has retraced below the major averages also. There's a possibility that it might underperform at least in the near future, and this zone close to around 730, 35 could be the area where it might, take a breather. So I feel that there's a possibility of underperformance, but the downside seems capped. So in case if you want to accumulate, you can start accumulating around 740 level, 730 zone. And positionally, level close around 780 to 800 could be the zone where it might face resistance. For RK Forge, it's comparatively stronger. The stock is anyways trading at the record highs. There's a slight dip in the volumes, so that indicates that there could be some profit taking at the high levels. But overall, the tone looks positive, so one can continue to hold RK Forge, and it looks comparatively stronger. So from very short-term trading perspective, RK Forge should be preferred over Bharat.
RK Forging is looking better than Bharat Forge at this juncture. Two more questions I have for you, Ajit. First of all, the paints basket. Indigo Paints has made an acquisition. It has entered into the waterproofing side of business, and it will be competing with the likes of Pidilite and Asian Paints. Now, Asian Paints, as we all know, has been underperforming. Uh, and with the entry of Grasim, it will be a disruption in the paint space as well. But how would you view some of these counters like Indigo Paints and Asian Paints right now? Do you think Indigo Paints, being a smaller player, the preference would go to that, given the fact that Asian Paints has already been underperforming?
True. And in fact, Namita, if you see this stock has been underperforming since listing because what I could see from the charts is that initial 3,200 and now it's quoting at 1,000. So if we compare within this basket, I feel that and Asian Paints, they are comparatively better candidates. Though we are seeing underperformance in the cement space, in the paint space, and it might continue at least in the near future, is what charts are indicating. Plus, the recent uptick in the crude oil price is also not, going to bode well for the paint counters. So, as of now, as a sector, I feel that one may, prefer to avoid at least from a short-term trading perspective. But from the investment point of view, definitely you can.
Right. Lastly, my question on the IT pack. JP Morgan has put HCL Tech on negative catalyst watch. It sees near-term risks for the company, given an uncertain macro environment due to what's happening in the US. So, how would you place some of these IT companies like TCS, HCL Tech, Infosys ahead of earnings? And also, do you think mid-cap IT looks better than large-cap IT right now, or is it the other way around?
So, Nandita, this particular space is actually keeping the participants on toes because earlier we were seeing that it was largely trading in sync with what we were seeing in the US market, in sync with the Nasdaq Composite. But of late, when the Nasdaq Composite was witnessing a decisive recovery, there was internal challenges that there could be spent in the cut in the BSFI space in US and Europe, which might hurt the margins for the IT company. And since then, we are seeing this deviation in the trend continuing. So for time being, yes, selectively, mid-cap IT names like Persistent have been holding strong. But within the large cap space, I feel that HCL Tech has done phenomenally well. There was hardly any decline when it comes to the recent price action. But HCL, TCS and Infosys, in case if the view is long term, then this is the area basically where one can start nibbling selectively. But from the short term trading perspective, HCL should be the preferred candidate.
So HCL remains the preferred candidate for the short term view. Lastly, Ajit, any stocks that are looking attractive to you at the current juncture with the kind of markets that we are navigating now?
So yes, as we were discussing that, banking is playing critical role. In fact, in today's rebound, like 100 points, SDFC Twins is contributing roughly around 60 points. So we feel that this outperformance may continue, but since we have an important event tomorrow, I feel that selectively one can start accumulating stocks like XS, ICICI, and within the auto basket, Bajaj Auto, we expect this the momentum that we are seeing right now to continue. So these are some of the names which one can start, accumulating gradually at the current levels.
Well, so those are some of the stocks that are looking attractive at the current juncture. With that, Ajit, thanks a lot for taking out time and joining us this afternoon. We'll touch base with you soon on our shows on Money Control.
Pleasure.
Well, with that, it's a wrap on this midday market mood check with me, Nandita Khemka. But for all your other news and financial updates, stay tuned to Money.